views coming in there. Let's get one more. James Knightley is the Chief International Economist at ING. He's joining us now. James, good to have you with us here on the program. Prashant this side. I think markets are just biding their time till the 20th of January, right? When Trump gets into the White House, the inauguration. Although that's not stopped him from sort of laying out clearly what he wants to do. But I guess there is a difference between what he's saying and what eventually sort of will happen, right? So seeing is believing, as they say. What's your sense? EMs, India, as you look into 2025, similar kind of environment like 24 or a little more adversarial?
Yeah, it is. At the moment, the rhetoric we're getting from the Trump camp is very aggressive. It's very much pro-America. You've got to deal with America on America's terms. And there's this notion about escalating to de-escalate, basically putting all your demands and then just seeing what other countries come up with. So we're seeing, for example, the tariffs, these aggressive taxes going to be put on imports from foreign countries into America. He's proposing a 60% tariff on China, a 20% tariff on everyone else. That would, on the face of it, be a huge tax hike for the US consumer. A massive $800 billion worth of extra taxes borne by the US consumer. So this is, it's not necessarily going to be coming through like that. We think it's sort of very big threats that won't be carried through. But, we will have to see how it unfolds. And, he's done similar aggressive moves on immigration as well. But it's interesting, I think, how he's now tying those tariffs to getting agreements on other things. It's not just about reshoring jobs to America. It's about dealing with drug trafficking into America. It's dealing with military spending in Europe. It's dealing with border controls on the border of Canada and Mexico as well. So he's sort of expanding out the aspirations for what tariffs can achieve in terms of deliverable wins for Donald Trump.
James, that's on Trump. But otherwise, when it comes to policy, do you expect the Fed to cut? I think that 25 basis points is still very much on the expectations table, right?
It is. Inflation that we had yesterday wasn't as good as we would have liked it to have been, but it wasn't getting any worse either. So, we've got a situation whereby the Fed on the inflation side of things can say, yeah, okay, things are looking a little bit better than it was. But it's more about focusing on their second pillar of their policy, what their policy targeting is. And that is, of course, maximizing employment. And the jobs report that we got last Friday suggests, that while there is headline payrolls growth, the quality of the jobs being created in America isn't very good right now. And unemployment is creeping higher. There's more slack developing within the economy. And the Fed just therefore feels that there's scope for it to move policy a little bit closer to neutral. We're not talking about stimulating the economy. We're just talking about it sort of easing off the brakes a little bit. So I think there's certainly a very, very strong chance they'll do 25. But I think next week they'll be signaling a slower, shallower path for rate cuts in 2025.
Hi, James. Morning. Good to see you in. So for 2025, what are you expecting from Fed? If you could quantify the number of rate cuts, if you could help us out with that. And what about other central banks across the globe? Japanese central bank is something that we'll be tracking. Do you think a couple of hikes is what they have left? And if you have a view with regard to the RBI, so the Fed, Japan, as well as India.
Yeah, so I think in terms of the US, we are seeing a situation whereby that inflation stickiness, the uncertainty about what Donald Trump's policies will bring for the US economy just means that the Fed is just going to naturally be more cautious in terms of its cutting. So they've done 75 basis points so far. We look for another 25 basis points next week. So that's 100 basis points in total for 2024. But we think it's just going to go to about 25 basis points per quarter in 2025. And they'll probably only do 3 cuts. So we're looking at their forecast update that they're going to produce next week. They're going to get new individual forecasts from the different FOMC members. And we suspect that they'll go from the 4 cuts in 2025 that they were signaling 3 months ago to just 3 cuts from when they get those numbers next week. Elsewhere, we see Bank of Canada today, yesterday cutting rates 50 basis points. The ECB today is going to be cutting 25. We're looking for more rate cuts from the Bank of England. Then you've got other situations. We've had Brazil surprisingly hiking by 100 basis points. yesterday. We've got Japan suggesting that perhaps it won't hike quite as much as it had previously been thinking. So you're getting some interesting shifts coming through. And this, just to me, in my mind, implies the greater chance of volatility. In general, I would argue that countries more at the forefront of Donald Trump's, targeting vision for getting deals done are probably going to be facing the prospect of more rate cuts just to try and stimulate, just to try and support the economy a little bit more. And I wouldn't be surprised to see India doing a little bit of that as well. But, it is just interesting. You're starting to see a greater split in how central banks are reacting. And that Brazil move today, I think, was very interesting. The Japan commentary was also been quite interesting too.
All right, James, we'll leave it there. A very good conversation and very useful for our viewers. Thank you for joining us this morning. Have a good one. We'll catch up again. Thank you. We'll take a quick break, but